So there are two rules, okay, which we surround these IB and IS signals with. And the first rule is the high of the IS bar and the low of the IB bar become immediate stop losses with a small filter. The second rule is all these signals are valid, okay, for 10 bars. So if they came in about 30 minutes, they are valid, okay, for the next 300 minutes. So we always define our signaling in terms of time. One signal, okay, which is coming on a 30-minute time frame or even on a 5-minute time frame is not valid forever, right? So a lot of traders, okay, what they do is once okay, they get a signal on whichever chart, on whichever indicator, okay, they are looking at, they expect, okay, that signal, okay, to last them for a lifetime. That's not how the derivative market works. The derivative market is very, very time defined. Time is a very, very critical element of the way we work in our markets. So every single signal, every single message, okay, which comes to you has a defined time to it, an expiry date. And for us, that expiry date is 10 bars. So after that expiry date, that signal is no longer valid. So as we go into this new calendar year 2025, I just want to talk to you, okay, about adopting a right process, about, okay, working, okay, with what you are comfortable with what you should be at. I've just walked you, okay, through a small element, okay, about what the order flow trading is all about, and I've used, okay, exactly, okay, what I've spoken to you about. These are the signals, okay, which we do every single day in our VMR room also. But my journey has been, okay, through a process of learning, and with that learning, okay, I've been basically fortunate enough to get some good experience, okay, knowing, okay, various conditions which have given my setups, and that's come through a lot of observation also. I invite you, okay, also on this journey. You'll have to, okay, get familiar, okay, with your tools. I've given every single thing, okay, to Orderflow, and we have got excellent market profile and order flow charts, okay, with us, which help us in our decision making. It's all about those decisions, getting the demand and the supply side of the market right, knowing, okay, when the buyer is stronger, knowing when the seller is stronger, and going to work with that.
Good evening, guys. Good evening, everyone. A quick sound check. Great. So welcome all to this Monday 5 p.m. session. We've had a action-packed week which went by, and even today was nothing short of a big mover. So let's first start our review with what has happened in the past week, as we always do on a Monday evening, and then we'll come to what happened today and why today's open is such an important part of market profile. So you have the Nifty spot weekly chart on screen, and this is what we did last week. So you can see profile wise, the Nifty weekly profile looks like a long liquidation profile. So giving context to this, the week before this was a neutral extreme week to the upside. So a neutral extreme does not give follow up. So the same thing happened even on the weekly time frame. And when that happened, it forced the late buyers of last week to get out. And what we started previous week was with the rejection in the first period. We had a POC at 24040 where we got a selling tail, and from there we got back into previous week's value, and we left this extension handle at 23911. To recollect, our rollover point for this series is 23915. So when you're leaving a sell side extension handle right at that place, it is telling you that the sellers are now taking over. So from there, we went on to drop lower and made a low, tag this POC also, and there was one daily VPOC of 23597 which got tagged, and we formed a trend day down on Monday last week, after which we got a balance, but overall the path of least resistance for the entire week was to the downside. In our previous week's report, we had mentioned this weekly VPOC as our probable target for the week, which was at 23339, and the low we made on Friday was 23344. So we just missed that weekly VPOC by 5 points, but auction had some different plans. That is the reason we did not tag it at close into Friday, because the structure of last week was a long liquidation profile. It had formed value completely inside previous value, but it closed away from the value on the downside. So this was a close in an imbalance, and we were expecting this imbalance to continue at open today, which is the reason it was not a surprise that we had a gap down. In the gap down, we went on to tag one important daily VPOC of 23199, which is from 7th of June. 7th of June, after the election results on 4th, was a trend day up. So from that big range of 4th of June, where we made that low of 21,000 change, we started to move higher, and 7th of June played a very important role. It was a trend day up, and it is the first time in 7 months we have got back into that range. So what we did today was we made a lower open. So this was an open auction out of range. So gap down and gap up opens are always tricky uh, opens to trade, and that is why the open type of today, the open auction out of range, has a very is one of the toughest opens to trade in market profile. But if you understand that it is an open auction out of range, and if you understand what the context is, you will definitely be able to wait and then accordingly position yourself on the right side of the day. So what we did was we tagged that VPOC of 23199, and from there, as expected, when you get a big gap down, there will always be some sellers who are booking out. So we saw some bounce, but the bounce came in the C side. The C side is something which we do not trust, and we always keep repeating this. And because even the C side never changes, it always stays the same. So it again made that high, and you can see where the high of today's seaside was. It was right at that weekly VPOC, which was not visited last week, but it got tagged today. So this was telling us that this POC, instead of getting acting as a support last week, is now showing sign of change of polarity. So the seaside high was right there, and after that we were not able to make any new highs. In fact, when we got back into the initial balance, it was clear that this structure, the market profile is giving us a clear rejection at previous week's low. So structure wise, market profile gave us a rejection, which is why we got this trending move lower from the D period. You can see how we have made lower lows all through into the close. So what we have done today is we have formed a neutral extreme profile to the downside. So this is a very bearish chart, but this is not something which has started today. The start had happened last Monday, and we had discussed this last Monday also, that it has been a very bearish chart, and we had an A period selling tail. So today we did not get the day period selling tail, but the bounce got rejected. That means the sellers are now shifting their base, and they have come down at lower references. So this would definitely be our reference for the rest of the week. And because it's a neutral extreme week, we'll have to neutral extreme day today. We'll have to see if we get a follow through to this profile. And if we are probing lower, then we will have to go back to that 7th of June profile, wherein we have the lower references at 23,004, which is one extension handle from that day. 23004 and 22954 are references in spot. Below that, we are on to tap a weekly VPOC, which is at 22745. Because we are on the weekly chart, we can go back to that weekly profile we have in June, and this is that POC which we can go on to hit in case we get a follow through to the neutral extreme profile which we have today. So 23,004 and 22,954 are the immediate support for tomorrow at the open. And if we sustain below that, this will be our uh, target. And we'll need to see what kind of auction happens at this place to then look for a review of the setup for the rest of the week. On the upside, we, as it's a neutral extreme, this IBH from where we have uh, given this follow through would be the first reference 23174, and then the POC which is at 23220 would be the higher reference. So we'll need to see how the spot plays up and whether we are able to get a follow up to this neutral extreme profile. So now let's move on to the futures. We have the futures chart on the left and the order flow on the right. So uh, as I was speaking, open auction out of range is one of the most difficult starts to take trades in market profile. Why? Because the auction is moved away from what was considered to be previous value. Open auction in range is still easier to trade because you know nothing has changed. The value remains same, so you can accordingly look to take trades. But in an open auction out of range, because of the because of the gap and because of the extent of the gap, there's a big shift in the uh, view of what the buy side levels are or what the supply side levels are, and because of which both the inventory also are looking to find a few new base. So if you see today when we opened lower, we went on to form a RB bar in the first 15 minutes. The volumes were huge. The volumes were much better than average. And this was still an open auction out of range because we are way below previous day's range. And we were not able to extend after opening. We opened lower, but we were not able to continue lower. You can see how we made a low of 23252 and we formed an RB signal in the first 15-minute bar. And then the volumes kind of started to reduce, which was telling us that the auction is now into a coil mode, a typical open auction out of range chart. So what happens in an open auction out of range after the opening hour is it will look to either uh, try to close the gap or it will continue in the direction of the gap. So today we got couple of RB bars in the Nifty futures. So there was no case of going freshly short because we did not get any sell side confirmation. We got an RB, we got back above VWAP, but yes, there was no demand at these highs. Again, we came down lower, we left another RB signal. In this 10 AM bar, you can see how again we have got zeros on the buy side, similar to what we got in the 930 bar. So this was not giving us any confidence to take any short nor long because both sides were held by the buyer and the seller. So this is very classic uh, show of how the buyers and the sellers are on an even scale. Although the sellers were dominating all of last week, the gap down today has got it to a very important reference. And why this is an important reference? 23250, which was the low today, and why we were not breaking that, is the series VWAP of June 2024. So this has been covered in the monthly report, and we also covered this fact when we made that swing low in November. The low in November which we made was at 2423263, just above that VWAP. So today again we saw in futures that level was being defended. So that is the reason once it got defended, we made the seaside extension and we in fact even got an IB bar. And this IB bar came on pretty good volumes. But then seaside being seaside, we do not trust it till the D also extends in the same direction. So that did not happen. And you can see how after we made the seaside, the D was not giving us the confirmation. Just like how we were getting RBs in the opening hour, we got RS plus RS in the C and the D period. So it was just a matter of time. And once we broke this IB low, the initial balance low, the initiative buying signal low, which was also around VWAP. In fact, in the VMR, when we had the audio session, we had discussed about this level being the important reference. If for any reason we break this 23220, we would have looked for short side trades with the stop loss being at the high of the day. So once we broke that 23220, you can see how the 23220 was held at the 11 a.m. bar. But once we broke that and closed below VWAP, it was very clear that we are looking for new lows in the day. And we can see how the NPOC was left here, and we got a pullback in this 1145 bar at VWAP, and the order flow is showing us classic rejection. Zeros on the buy side and VWAP is getting rejected. So you got the seller confirmation when we broke 23320, and also if you notice, the high of this bar is right there, 23320. So it was again showing us the change of polarity, not to ignore the coincidence of this 23320 with the spot weekly VPOC which we were talking about, which was at 23339. So in the references which we have for spot and futures, both will overlap, because the rollover point which we got in futures for the January series showed us a selling extension handle in spot. So same thing, what we had, the series VWAP series reference of 23250 was trying to be protected today in futures. So that again showed some kind of support, because when we made a low in this F period, it held that RBPOC and gave this bounce to VWAP. And when you got rejected at VWAP, you know that the only way is to the downside. And then came the important G period where we saw some good reds coming in. You can see how many for the 3 consecutive bars we've got trifecta of reds in the order flow, and we remained below VWAP. So as long as we were not able to take out that 23320 level, we were looking for downside, and we got that downside in terms of range extension from the HTP onwards. We left an extension handle at that important June series VWAP which we were talking about, and after that, later in the afternoon, the selling intensified. There must have been some buying which was coming in earlier, who were forced to cover. So this 145 bar which came in the J period, which we consider J to be a cousin of C, so we do not give it lot of importance. But when you are getting an IS, just like the way we got an IB in C, we will have a look. And because you got some big reds here, you got this 1443 red which got the POC of this IS bar. So this became our reference, and we went on to break lower, making lows of 23112. So now what we did was form a neutral extreme profile, and this neutral extreme profile saw the POC shifting to the lows into the close. So the POC has shifted here to 26170, where we have, I think, closed in futures. So our reference for tomorrow in futures would be this IS high. This is on 15 minutes, but you can even watch it on any time frame you want and take it as your reference. So it'll be important to note that we did get the IB30 today, but this came in the C side, and this IB30 did not get triggered. It would have got triggered only above this 23408. And why we got rejected here? Because you can see how we were not able to take off this previous week's range, like what we saw in spot. It almost touched it, but in futures it stayed little bit below the previous week low. So the C side leaving this IB and unable to get back into previous week's range, and a break of this IB low was a very good uh, setup to go short and hold your shorts for new lows, and then accordingly trail your stop losses. So now going forward, our stop loss for tomorrow for holding shorts would be this 23225, whereas the swing reference would be the neutral extreme VWAP of 23250. So you can see how this 23250, which was the opening lows of A and B period, and it was matching with the June series VWAP, is now a important reference. It needs to show us change of polarity now. It is now on the swing supply point. So as long as we remain below this 23250, we can expect more downside in this weekly settlement. So we'll need to see how this goes, and we'll need to make sure we are using the right uh, setups, because in market profile, if you understand the open type, you will know when you need to rush into trades and when you need to be patient and wait for the trade to come to you. So open auction out of range is a kind of open where you need to be at your best analytical self and allow the market to come to you, show you its hand, and then get into the trade. And if you are able to do that, the market will definitely reward you handsomely, because open auction out of range, although is a sober start, it is always given good moves in the second half of the day. And today, in fact, we got moves in both ways, the C side and then the next trending move lower in the from the D period onwards. So this is how we are placed in Nifty futures. So I would want to introduce one good new feature which we have. We have already spoken about it in our sessions before, which is the candlestick charts. So the candlestick chart you can open with any window. If you are in the market profile section, at the bottom part of the layout, you have these icons. You have the market profile icon, you have the order flow icon, and then you have the candle chart icon. So you just need to click on this candle chart icon for you to open the candle chart of the day. And this is very comprehensive chart because this has everything included in one screen. Because if, for example, if you want to see the 3-minute order flow chart of a day, it will take you a lot of screen space and you will need to scroll it back and forth. But here you can see, you can almost see 2 days of 3-minute data. And this candlestick chart has all the order flow signals which are come up, which come in the room. So you can see this yellow bar with a asterisk on the bottom is an IB bar which came, and this star bar is an RS bar which came right at the highs of the day. You have this pink shaded bar, this is the IS bar. So when you're getting an IS bar below VWAP, you're looking at sellers get coming into the picture, and then VWAP will be your reference. You can see how these highs got rejected at the VWAP, and then in late in the afternoon you got another IS at 145 bar. So these are very good features in this candlestick chart which will help you to know what the auction is doing, from where the auction got the IS, where it got rejected at VWAP, what it did at the initial balance high and low, because all of them are included in this chart. And you also get all the order flow signals of the day. So when you're getting just a star, this will be an RB or an RS bar. So when you get a shaded candle with the star below it, if it is a yellow shaded candle with the green star below it, it's an IB bar. Vice versa for an IS bar with a red star on the top and a pink shaded bar. So you just need to know, one look at this chart, you will be easily able to find out where the signals came and which are the references, where were your entry and which you need to track for the next day. So along with these candlestick and the initial balance, VWAP and the POC on the chart, along in the open interest, we have these two columns. For the futures, we have the COT, which is displayed in the first column. You can see whenever there is the green COT, you will have these green spikes, and when you have red COT, you will have the red spikes. And then the bottom panel is for the volumes, because it is very important to get the order flow signals on good volume. So it will help you to realize where the highest volumes came and from where you can take trades. For example, I'll just pull this back to previous sessions candlestick chart, and here you can see even on Friday how we were having dual auction day, and we made these new highs in the E period. You can see the volumes were the highest in this 1115 bar, and you got that big 2000 seller in the order flow, and you can see how you've got an IS bar here. The COT is maximum red on of the day right at this bar. So if you observe this 1115 bar, although the candlestick is showing you a green color, the COT and the volumes, and immediately after that you get an IS. So that tells you that these highs getting rejected, and this has come right at the IBH. So when when there is an attempt to extend the range, you're getting sellers, you're getting an IS. So that tells you that you need to look for short side trades. And then you got the second IS at 1205 bar, which then went on to give a move below VWAP and tag this VPOC. So what this candlestick chart also shows us is when the POC of the day is changing. So on Friday at open, we started with a open rejection river, then we fell. So at the open, the POC was at this 23625, and from there, after we fell, the POC shifted to 23500, and from this 23500, we got this green bar and this IB bar. This was telling us that there is an upside coming in. So once you got an IB at VWAP, it will definitely give you good up move. We went on to tag the highs, and because this was a strong open which got rejected, the VWAP was taken out. So there was a very good chance of new highs coming in. But as always, we see at order flow what it shows when we are giving a new expansion. So when we made these new highs, what we saw was the maximum red cut of the day coming in. So this was very clearly telling us that the buyers who are coming here have booked out, and then we got an IS signal. So in order flow, we give the maximum importance to the signals. Caught, yes, definitely caught plays a supporting role, but caught is the last part of what we do in order flow. We have the signals, then we have the LLTs, and if two of them are matching, for example, here we got the IS and we got 2000 seller and a 1000 lot seller. If I switch it to the order flow chart of that particular day, and even in this we have a very good feature, you can select the time and go to that period which you want. So I've selected 10th and 11:15, and let's go and check out what we did on that day. So you can see how we got this 2809 seller in this break of new highs, and this seller was being defended because right at this POC is where we made this new high. We got this IS bar, and then again we kept drifting lower. So this is how you need to watch out. What we saw on the candlestick chart is also there on the order flow. So when you get a big seller and then you're getting an IS, it is telling you that all you need to do is take this as your stop loss and go get into a short side trade. So two of the criteria matching is a very good sign because you have a LLT as well as an IS signal. So coming back to this candlestick chart, they are very good references because here you are able to see only around 12 to 15 3-minute bars. But if you go to the candlestick chart, you're able to see the entire day's review. And you can in fact even see where the previous day's references was and accordingly look for a rejection or an acceptance. So you definitely need to make use of these candle charts, which the new feature is, and you can do this even for the options. If I just put up an example of a 23,500 put today, let us see what were the signals we got in that today. So you can see how at the open we did not get any IBs in this put. We got an IS, another IS, and this IS got negated because it never broke the lows and it went above the highs. And then we went on to get back above VWAP, and here you can see you got one IB here, you got an IS at VWAP which did not get a follow through. We never broke below the lows of this IS bar, and then you've got one good nice green IB at 1257, which is after we spoke about the GTPO getting in some good sell side references. And when you are getting an IB bar with a range extension, when the range extension is happening in the market profile chart or in the futures, and you're getting an IB bar in the option, in the put option, this is a very good uh, trade that you need to go for. So this is the kind of trades you need to go for, and the candlestick chart make it very easier. So once this IB is closed with the low of this IB bar, you can go long above the IB bar, and then you keep trailing it. You got another IB bar, you make the low of this IB bar as your trailing stop loss, and you will definitely book profits in the some part of your position. So these in the option chart, what we have done by default, you can control, you can change the settings in this panel control, which is there at the bottom. In options, what caught, we don't give lot of importance to the caught because option sees lot of writing and covering. So caught is given max importance for the futures. In options, what we rather look at is the open interest and when it is rising and when it is coming down along with the volumes. So that is the reason you can see how in case of some on settlement days, you can see if the open interest is showing us green and the auction is below VWAP, you can imply that lot of writing is happening. But the moment we get back above VWAP, you can expect the open interest to start coming down and the writers to cover. So this is how you can make use of these candlestick chart for both futures as well as options, and they will definitely give you a good review. And the best part about this is you have different time frames to select this. You can also see these on 30 minutes, 15 minutes, 5 minutes are the other option. So what we saw in the order flow in Nifty, that IB getting cancelled of the C side, you can also see the same thing in the candlestick chart. So this was the IB bar which did not get a follow through, and this was actually a very good signal. In case we would have got a follow through to this, we would have got back into previous range, and we were looking for a tag of this VWAP of 23550, but that did not happen. That is the reason a break of this IB low negated the bullish setup and gave a probe lower, and we got this IS which is got triggered also. So with this IS high being the stop loss, we can continue to hold shorts in the coming day. So this is as far as the candlestick chart is concerned. So let us now quickly make a quick review of Bank Nifty before we can wind up for today. So before that, there is a question which I'll just answer. Caught showing green for more candles. So as I just spoke, caught is just one small part of what we look at in order flow. We have around 6 things which we watch. One is the signal. The most important thing is the signal in the order flow, which will carry the most weightage. Once after the signal will come the LLTs, the big players. If a LLT is matching with the signal, if you're getting a big green LLT and you're getting an IB signal, that is a very good setup for you to trade. So there is the inventory which keeps coming and which keeps churning out, and this inventory, some of this inventory is for the entire series. So COT is always a lagging indicator because the open interest gets updated only at the end of 3 minutes. So it can give you a little bit of lag. So we will not look at only COT to take trades. Yes, we would want the COT to give support when you're looking at a trending move downside. We would want the COT to be red. 10 bar COT also we want it to be red when we are looking for more downside. That is there. We definitely look at it as a support signal, but COT is not the uh, feature which you have to give the highest importance. The signals and the LLTs with zeros in the order flow have lot more weightage in the order flow setup than COT. So if you are having other features which are adding up, 2 to 3 features of order flow which are adding up, that is good enough for the trade to move in that direction. COT after a while can change and get in sync with what the market is doing. So that is why you need to be sure if that you're following all the features of COT, not just one feature, all the features of order flow, not just one feature. So we have the Bank Nifty's weekly spot chart of last week, and we had discussed this how we got rejected right from weekly POC of 5851 at open. So Bank Nifty was the more bearish of the two at the open, and we had discussed in last Monday's 5 p.m. session how these weekly VPOCs were the target. In fact, the first weekly VPOC we had tagged on Monday itself. So we went on to break below both these weekly VPOCs, and we formed a trending profile down on the weekly time frame. So what we did was formed completely lower value, formed a trend week down, and we closed in an imbalance because we were right at the lows at the close. So this imbalance was expected to continue, and that is the reason we got this gap down open. And just like in Nifty spot, you can see how we have made that C for Dhoka kind of a extension here, and that C side has got rejected right at previous week's low. So these are market profile nuances which help you a lot to remain in sync to understand the structure and to remain in sync with what the auction is trying to do. So once we got this C side and we did not get any follow through, it was very clear that the Bank Nifty is also ready to resume its downside. It went on to make new lows into the close. So neutral extreme profile, so it'll be the same. We will have this POC of today. This is the spot chart. So POC of today would be the important reference, whereas on the downside, we have this May month's POC of 47726, which is one important swing support for Bank Nifty spot. So if we break below this, then Bank Nifty can get even more bearish. It is already in a bearish mode, and it is the more weaker of the two index from a good amount of time. So that is how we are placed in Bank Nifty. So there is one more question. I'll take it. It is today regarding today's order flow in Nifty futures, which we discussed. We will just go through the future order flow again. So you don't, what you need to do in order flow is first, before looking at the order flow, is first understand the open type. That is the reason we give lot of importance to the open type. So once you know it is an open auction out of range, you will wait for the order flow signal to show up. And what was the order flow signal which showed up after the open? We did not get any sell side signals. We never got any IS. We got the IB signal, but this came in the C side. Even if you're looking at the 15-minute chart, if you see that a probe above this is a buy signal, we do not take a trade in the C side, especially in the second half of the C side, because C side is known to give us a false breakout. So it would have been better to wait for the D period to make a range extension, more so because we saw this high matching with the previous week's low. So it was adding up as rejection. So once you see in the first half that there was buying which was trying to force, but then when do you know that the buyers are not doing a good job? When the auction fails to stay above VWAP. So till the time it remained above VWAP, we were looking for a range extension to the upside. We were, because it was the buyers who had pushed it higher, so we were waiting and wanting a range extension so that we can get along with the buyers. But once this VWAP broke, which was also the IB low, which I had mentioned earlier, it was telling us that the buyers are losing control. So in market profile, these two questions which Jim Dalton has explained in his book are very important. First thing is you need to know, try to assess what the market is trying to do. And second thing is whether it is doing a good job. So the market was definitely trying to go up after it got these two RB bars and got this IB bar, but it did not make a range extension. So failure to do a range extension after the C side was giving the buyers a negative mark. And once we broke VWAP, it was very clearly known that the buyers are now in soup, which is why once we remained below VWAP, we got rejected at VWAP. You can see we have 3 rows of zeros here. So we need to look at order flow as telling us what it is doing, what the auction is doing. And when you see a rejection like this, you know that the auction has not completed the downside. And we went on to probe lower and we got this IS into the close. That means the second half of the day, it was very clear that we are looking for a neutral extreme downside close. So that is why, that's what I'll again mention, that it is not just caught which you have to look. It is a combination of what the order flow chart is showing you. It is the LLT, it is the zeros in the bar, it is the signal. So when you're getting an LLT, a big seller with an IS bar, it is a very good signal to take. You can see how this IS gave a good follow up and how this IB could not give a good follow up because it came in the C side. And in fact, even into the close, we got some huge big numbers. You can see this big numbers over here and a big green also over here. So you will keep getting LLTs. You will keep getting LLTs all through the chart. So there was another question that there were many green LLTs, but the green LLTs were not single. If it was only the green LLTs, the cot would have been much, much more green. Even here we have got big red LLTs matching with the green LLTs. So LLTs will be there everywhere. We need to see where the LLTs are coming with a good order flow signal. So here you can see how you have got a 3871 green, but you've still not got a good trade. Here this 1400 red itself is given you a good IS setup, which you could have used to take a trade to the downside. So it is not just presence of an LLT or just presence of a green cot or just an individual IB signal which gives you a trade. It is the combination of some of these features together which will give you the most probable trade winner. So when we came to VWAP, the VWAP is showing you zeros on the buy side, the 1145 bar. So 1115 bar is the first bar where we broke VWAP. After breaking VWAP, if for the seller to remain in control, we would want the auction to remain below VWAP. So when we are testing VWAP in this 1145 bar, you're getting a trifecta of zeros on the buy side. So this is telling you very clearly there is no demand at VWAP. So these are very subtle hints which the order flow keeps throwing at us, and then this was the POC and how you are getting zeros at the POC on the buy side. So once the VWAP got rejected, then the POC got rejected, then you know that the PLR is going down. So that is how you need to consider all the things which add up in an order flow chart. Don't just take one or two and try to get a trade out of it. Try to see how you can maximize at least 3 or 4 of these features in a single setup, and then you look for trading that setup. If it is not matching, it is better you wait for that to happen. If you are only getting green cot, you're not getting an IS or you're not getting an IB, you will not go into longs. We look for initiative signals to take trades. Cot, LLTs, zeros are all supporting characters for us. So this is what was there for today's session. Bank Nifty also, we discussed how we got that rejection from previous day's entry, and then we went on to close lower. So there's one more question about the 245 bar order flow. So let us just go to the 245 bar order flow. 245 bar order flow is just showing us booking. It has big volumes and it has caused the POC to shift down. So we will need to see what happens at this reference. We have closed around the same. The point of control, the highest volume for the day has been shifted over here. So this will be our reference for tomorrow at the open. We will see what the open type is and we will see what the order flow is showing us at this level. In case we are able to stay above this level and probe higher, this IS 30 high would be our reference. And then we have this neutral extreme VWAP. So all these references are definitely there before the market opens, but it is very important for us to see what the order flow does when it tests these references. So as mentioned, there are a lot of things which come in an order flow chart. There's a question by Devin who is telling that 10 bar cot is good green. It is green, but it is only one part of the setup. So it does not definitely give you the full picture, and there is lot of things which happen in the market. Lot of times there is a play in the option market which gives a move. Lot of times there is a action which is happening in the cash market which gives a move. So today's gap down was something which was not caused by heavy selling in futures on Friday, because we did not see that. In fact, even on Thursday, we saw the COD turning green. We saw the sellers booking profits. But then on Friday, we again saw the sellers coming back, giving us a open rejection reverse. So what we need to do is we cannot just go by the 10 bar caught. Yes, we look at 10 bar caught to be for us to be in sync with the trades we are taking. But our trades will be mainly on the initiative signals. The IBs and the IS is what we look for. And then we look at the 10 bar caught and we want the 10 bar caught to support the trade which we are taking. It cannot be vice versa that we see the 10 bar caught is green and we want to take a long side trade. But there is no IB in the uh, order flow. Same thing on Thursday into the close, we saw a lot of green caught, but we did not get any IB candle. So till the IB did not come, there was no long side trade. So it was not a surprise that we again probe lower. Then we got an IB in the Friday afternoon after we made those new lows and went back above VWAP, which gave us a good move. So you always need to consider what the order flow as a whole is telling you, not individually. Only then you will be able to see the picture clearly and take good trading setups where the probability is more in your favor. Shifting of POC is a sign that the highest concentration of volumes is come lower. So if you are a seller, you would definitely want to book profits into the close and lighten yourself. And as I mentioned, tomorrow we will see what happens at this POC level and what volume the order flow is showing us, and then accordingly look to take it forward. There's a question by Yash asking if there was an FA. No, there was no failed auction today because we stayed for more than 30 minutes above the initial balance, both in Nifty as well as Bank Nifty. Because in order flow we saw there was no volumes above this 23333 in the morning. So it was a freak tick which had come in the exchange because the trading terminals were showing us volumes of 23400. The high of today was 23400, but you can see in the order flow how there was no volumes above this 23333. So if we had volumes till 22,400 and then we would have made this, then it would have been a failed auction, but we don't have a failed auction as such. So that is it for today, guys. Thanks for joining in and hope this session was useful. As mentioned, the candlestick charts are a very good comprehensive addition to the VTrender charts. So definitely it is worth trying it out, watching it, and it also gives you a larger view of what is happening in the market. So thank you for joining in and signing off for today, and let us catch up soon for another such 5 p.m. session.